While there is an unmistakable freedom that comes with self-employment and contract work, the trade-off is having to plan for your own future when it comes to retirement. Experiencing new cultures and surroundings are just a few of the tantalizing benefits of teaching abroad, but the decisions you make with your income today will determine your retirement options down the road. Today, we will walk you through some options available to self-employed workers. Retirement plans are not a one-size-fits-all solution, so we'll help you determine which option is best for you. Let's dive in. Without a standard 401k from an employer and no option for contribution matching, it takes more time and attention to ensure your retirement is on track. There are several options when it comes to retirement, so it's critical to understand the differences to choose the best retirement plan for your situation. Here are a few to consider. Number 1, the traditional or Roth IRA. If you're just starting off in the world of self-employment, a traditional or Roth IRA might be the best option. In 2023, the maximum annual contribution will be $6,500 and withdrawals at retirement age are tax-free. Roth and traditional IRAs are simple to set up and be done online within a few minutes. These retirement accounts have no special filing requirements, but there are some income limits. If you earn too much, you can't contribute to a Roth IRA. Number 2, individual 401k. If you are self-employed with no employees, you can contribute twice each year to a 401k account. Your first contribution is made as an employee, and you can contribute up to $22,500 in 2023. As the employer, you can also make a second contribution of up to 25% of your compensation. This can result in a significant balance increase each year and is best for those who are in a position to save a great deal of money. Number 3, SEP IRA. A SEP IRA, or a simplified employee pension, is a third primary path to retirement as a self-employed worker. This is easier to manage than an individual 401k. There's limited paperwork and they are incredibly flexible. You don't have to contribute yearly. For self-employed workers, the contributions can be at most 25% of your net earnings, up to a maximum of $66,000 in 2023 tax year. The caveat is only that employees can contribute, so you must ensure your income as a self-employed worker comes through a licensed business like an LLC or an S Corp. A SEP IRA investment will continue to grow tax-deferred until accessed in retirement. Number 4, simple IRA. The fourth option is a simple IRA. This is better for larger businesses with multiple employees, so it's unlikely that this will be the best option for your personal business. In the 2023 tax year, the maximum contributions to a simple IRA are $15,500, more than twice the contribution limit for a traditional IRA. In this scenario, employer contributions are mandatory, either through a matching program or an automatic contribution. Matching programs require employee contributions before the employer matches the funds up to a certain amount or percentage, while automatic contributions can occur with or without employee contributions. Suppose you are the company owner and you are also the only employee. In this case, you can double your investments by contributing from your salary and then matching it as the employer within IRS regulations. A key benefit here is securing tax deductions for any contributions made as an employer, taking some of the pressure off of tax season. Number 5, health savings plan or health savings account. Yet another option for saving money is a health savings plan. You already have to pay for your health insurance, and deductibles tend to be high for individual plans. Even though an HSA is designed to allow access to tax-free funds for medical expenses, It can also function as a retirement account. HSAs are funded with pre-tax dollars, and if you don't need them for out-of-pocket medical costs, you can let the funds sit there and accumulate year after year. The maximum allowable contribution is substantially lower than the IRAs, the 401ks, or the SEP IRAs, but it still offers an additional opportunity to tuck money away while keeping it accessible in times of need. In 2023, the maximum individual contribution will be $3,850. Be sure to check out my video in the description below to learn more about HSAs and how to get set up. Of course, if a budget allows, we always recommend employing the services of a tax or retirement professional to help you navigate the ins and outs of your situation. The main takeaway is that getting a retirement plan set up and making regular contributions is a do-it-yourself job if you're self-employed. You should prioritize paying yourself first, which means saving and investing. This strategy will result in more significant payments to yourself when you retire. Set a certain amount of income aside before you start spending, so you'll continually build your nest egg and set yourself up for success in retirement. If you are filing taxes as an expat living in a foreign country, you'll need to take special care when selecting retirement plans. Most foreign retirement plans are not considered qualified by the IRS. As a non-qualified plan, any money you add to the account will not be tax deferred, and interest earnings are not tax exempt. Depending on the type of foreign pension or retirement account, there may be additional reporting requirements when taxes are due. If you are living and teaching in the United Kingdom, Australia, or Switzerland, you will be required to hold a foreign retirement account. These countries are typically covered with a tax treaty that protects workers from having to double down on taxes or other requirements. So it's not a complete non-starter to work in these locations. Well, that does it for our retirement planning deep dive. What other tax and savings questions do you have? Drop them in the comments below. If you found today's video helpful, let us know by tapping that like button before you watch your next video. And if you're looking for more content covering financial freedom and income diversification for educators, hit that subscribe button. Ringing the bell will enable notifications so you're always the first to see our newest videos. Until next time.